Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour on this August 24th day, and what a session. Down 1,000 points at one point. Let's go through it. We'll go through it in slow motion here. And most importantly, what we're looking at here is that arch formation with the waterfall cascade, which I'd said to subscribers was more like Niagara than just a waterfall cascade, accelerated down this morning very sharply because of the overseas markets. Let's just run numbers right now. Of course, we've had great programming all the way through. Let's hope that we can continue that all day here at TFNN. Let's go through this because we've got the Dow at this point down 452 at 16,000. The S&P is down about 43 at 1927. Comp index is down 123 at 4582. The gold contract is up about 70, 80 cents. I'm watching this closely for my subscribers. We are the only long we've got actually is gold. That's pure long. That is not a short position. That is an ETF made up of short stocks. So it's holding well. So the gold is up, as I say, at 1160. Silver is down 28 cents at 15. Platinum's down 21 at 998. High-grade copper is now down at 224. If ever there was something that was telling us for so long to coincide with the way the market has acted, making that rounding top since the February low, copper's been it. And that's just saying international markets, the world economies are slowing down. There's just no question about it. The bonds are only up 24 30 seconds at 160, they call it 161. It was up, they were up higher before, but you expect a pullback to come now that the market has sold off so strongly, and there are going to be some buyers coming in. We'll talk about that in a moment. We've got the dollar down $1.56. Now, unfortunately, I can't show you my trade station charts right now. Just not there. They're working fine. I'm not working fine. There was a little problem that I had over the weekend, and as a result, I'll have to wait probably until later today, or maybe even early tomorrow morning. And I did tell my subscribers I would update at 12:30. I will still give the update. I've got other ways of doing things. It's just the charts that you can see right now. At this point, I'm using Warden as a just the charts that I need to look at. There's the Dow. Look at that sharp pullback. And as I said, the dollar. I wonder if I can just go dollar here. Dollar. Oops. Let me go dollar here. DOLLAR. Dollar DXY is what I want. DXY, that's it. Okay. So there's the dollar index. Remember, I said that left side low in the 95 area. Then what was it exactly? 95.45. If that's taken out, I said that's going to participate a chance. So this is the first real chance that gold has had to show that it isn't just a currency of fear that is going to be incorporated here, but it is also on its own going to show that it has the resiliency. Now, resiliency is not the word. It is the strength to be able to rally. So I'm watching the dollar, the dollar relationship to gold very closely. I'll have a lot more about it when I'm back online with my charts and my mirror images of dollar and gold and all that stuff. Doesn't matter. Right now we can do plenty of work. And what we're looking at is, in the Chapman-Wade methodology, these arch formations constantly come back and retest important lows. And that says to me that this moving average right here at exactly, I'll tell you where it is, at 94.44 is going to be important. I think it's going to break that. If the dollar closes underneath the left side low of 94.68 that was made back on the 29th of Monday, the 29th of June, that's going to suggest there's a trend line coming up. And that's going to suggest that that trend line in about the 93.80 area is going to break and that the dollar will come down further. And that would coincide with this uncertainty that we've got here. Okay, now let's run something that I want you to do. In any case, it doesn't matter that I haven't got the charts. I've taken a line and I've drawn it in. The Dow low, this is going to be very interesting because the low was, my target was 15,855. That's what I was talking about with subscribers over the weekend when I went into great detail. Actually, this is a very good time to show some of those charts. This is what I was doing during the weekend. Oh, I don't know how many. I sent out a lot of charts. And in fact, I'll show you the work that we did because we took profits today. I know that the market could pull back from here, but I said no. I showed this is the Traders Corner, and I said I'll give a market update around about 12:30 this afternoon. The diamonds, I showed the levels that we're looking at. I said Dow 815, 855 is the support of the October low. And we've taken that out, smashed through it. In fact, went all the way down to 50,370. I mean, that, whoa, that's remarkable. The dollar, this is the long side of the dollar, of the Dow diamonds. And there's a chance that I might be thinking about maybe having a trade to the upside. I've got to see a lot of evidence this morning to say it's even worth taking a chance on that because I'm not sure that all the damage has been done. Although Monday would be the equivalent of that Dow 300 point something decline on March the 16th, October the 16th of 1987. And then that Monday 506.20% crash. This is a little different. I don't see the chart patterns. I know people are talking about the crash of 87. I don't see a relationship in the chart formations at all at this point. I'm seeing when you get a long extended top, it implies that the downside could be very vicious when, in this particular instance, the neckline, this is what I spent time showing my subscribers over the weekend, when the neckline breaks, which it did, I think it was before that, I was saying if the neckline breaks, this was Thursday, what you've got is you could get a measured move from the top of 18,351 to the 17,037 low. So that's 500 points down. That's 16,000 approximately 500. And that's going to be the big test. And the 16,550 is going to be very important at this particular stage because it is way, way above where we are. I mean, the Dow's at 16,000 at this particular point. However, if certain things come together, I can see another arch formation with that very strong 15,855 low that was made as a powerful rocket ship move to the upside. Look how long. It was so powerful that it took until Thursday to break that low. So that's from February the 20th, no, that's October the 15th of last year. I got 15, that should be 14. So just let me correct that, 14. And remember the chart you're looking at right now, not an updated chart. It is from Friday. I will have it all hopefully by tomorrow morning. I'll have everything back again on this particular platform. And in the meantime, what we're looking at is that everything, the left side, right side, price, time action. You know, this is so interesting. Over the weekend, I extended it out. But I extended it out reluctantly because I had right in there was a shorter time frame to the left side. When you take out a left side, right side price time match in a shorter period of time, you've got to be careful because that means you've accelerated down using the propulsion, the turbocharged propulsion to the downside. It makes rallies shorter and quick, sharp, but maybe shorter in duration. All right, here we go. So the Dow has taken that out. Now, what was support, in fact, there wasn't even support, it was there for what, a day. It went plop down to 15,855, then started an immediate rally, that October 15th low, the 16th turnaround, the 17th. So this is what we're looking at. We're looking at 4 massive declines. We don't know where we're going to close. I suspect that the worst is over here, that the low that we've just seen intraday of 15,370, I don't think that's going to be taken out in this move. I think there are going to be a lot of buyers coming in to at least attempt a rally. So let's go out here and let's move on. We're going to go to this chart here and look at the monthly. And the monthly says, because you've taken this out in a shorter period of time, and this one actually is accurate. I could have gone to there and it would have been too short. This is fine. I have no problem with this. 918 was supposed to be the low, the test of the 15,855. We just did it today. Kaplop. That puts you into the monthly. Now the monthly, I couldn't believe it. I typed in 15,340 over here, and I showed this chart, left side, right side, price, time match, and that goes to October, 2 months' time. Today, we went to 15,370, 30 points above. 30 points above something that should have taken Now, I love it because Tom always talks about the speed to the downside. I always talk about an arch formation, regardless of what happens on the right side, unless you're in a bear phase, you can just very gently go all the way to the upside. It doesn't have to be gentle in the sense that you can still have huge candles, but I'm talking about gently because look at this move. Once you took off, it was a very gentle move to the top. You went 18,103 in the Dow back in last year, in 2014. And then in, what was it, January, you went to, when is that? In March, you went to the week of the March the 6th, you went to 18,288, pulls back, and then you go to only to 18,351, and then you pull back. So as far as I can tell, this move down here, that was speed. And that goes to Tom's expression that you come down and you can just wipe out bars and bars and bars on the left side in just 2 or 3 powerful moves to the downside. Sometimes it's only one, as in this case, if this move keeps going down in August. So what essentially do we have? We have a sell signal, which is in a sell mode in the daily, in the weekly, and the monthly has just gone because the price is not shown here. The price should be. I'll extend this lower just for now. I hope I remember to take it out. Okay, going down right to that level. Same month. I'm going to make this red, color red. Yep, make it red. Make it nice and thick. Wait, there you are. Okay, there it is. So now we've got a candle that goes straight down. I don't know what that gap is. Right there. And what it does is it tells you that there's a lopsidedness here. Even to that low of October, you've gone smashing through it. And this is very serious stuff. And that's what I've been talking about for a while. There's a question is, I can't show it in the futures here. Well, let me just, no, I don't have the futures at the opening. Question if I'd be able to show it in the futures. What a pity. I have the futures up until prior to the opening, but they went much, much lower. Anybody here, can you just tell me? I can't remember. Anyone tell me what the E-mini, S&P E-mini future low today is? I should be able to get it, but I don't want to mess around. I've got it there. I just go and see it. 1840, 1830. I actually wanted to buy it. I should remember it. No, this is not the Dow. Oh, you're talking about the Dow. I wanted the E-mini. E-mini 1831. Okay. So if you're going to 1831, you haven't taken out the October low of 1815. And at 1831, you're over here, this new week, and you're over here, right there. And that broke the Chapman wave inside wedge dash line support. And that suggests that now that's going to be resistance. And that can go all the way to the 1880s. So let me do this one at a time. We've got a break coming up. And I want you to just run a couple of things here to show you chart patterns that are very important at this particular time. I'll show you the S&P. Actually, during the break, I'll have a chance just to fill in. I'll fill it in so that it looks like it's real, but in fact, it won't be real.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. Here we are. I'm just filling in these charts just the way they should be if it was in real time. So here's the candles from last week and this week in the QQQ series. And look what's happened. It's testing the low bar of April of 2014 of 83.28. Today's low so far is 84.47. Is that right? Let me check. 84.74. So that says that a chunk of the work has already been done, a huge chunk of the work. What work do I mean? A chunk of the work that says that the indications of weaker technicals that I keep talking about that should see a price move to the downside has culminated now. It doesn't matter what the story is. You know, you could say China, you could say nervousness in the US, whatever it is, doesn't matter. The fact is, there is a very serious decline that has occurred that has made the chart formation extremely bearish. And because of it, because of this is basically the Grand Canyon right here. Even though you've got a week to go from today before you end the month, it says it's some kind of a rally. You've broken key support levels. Look at this. You've even touched the, that is the 50, yep, that's the 50-period exponential moving average, broken under it on the day, that is. And, of course, in the week and in the month. And that's going to be very important, where we land up at the end of the day. So this is something that I'm considered to be what I've been warning about for a long time. Now, let me just go back to what I was talking about before. So this is the daily all the different things that we had. So we had at one point the BIS, which is 200% short the IBB. We took profits, we had small gains, we had a couple of small losses and one nice gain. And then what happened is we just couldn't get back. I kept trying to get back in, didn't make it. And then what happened is, let me show you something. The IBB, this is the 200% short, the IBB, which we are short. And I made a big deal about this for a year. I've been talking about the speed with which we could give back gains. The IBB could give back gains, which was my big concern. Look what happened. Today's low in the IBB is, in fact, 329 was my target on the downside, my second target on the downside. Today's low was 284. Look at this. 284 trading right now, down 2.7% at 306. So this is what I wanted to show you. So we basically are still short, but I lowered the buy stop. I lowered it sharply. And that to me says, so where did we go down to? What did I say? 284, 280 something, right there. So all of this right-hand side, left side, right side, price time match, smashed to the downside in a shorter time period. What do we have now? We have this. I'll extend it to the right. I'll save some time. Extend right. And now what we're looking at is having gone below the Chapman wave inside track support level. Where does it close? That's going to be very important. Okay. The semiconductor index, which we've been short for a long time via the SOXS, which we've gone in and out with trading positions. We have a core short all the way from near the 58 level in the SMHs, which the high was 60.13. So very within 2 points of the high, maybe 3. So we had the SOXS, and we got it at 40.63. It hit this morning. What did it hit? I keep looking at the wrong chart and saying, hey, something's wrong with this picture. It hit this morning 82.31. And we've been stopped out. I'll probably have to read it because I said, if it hits SOXS, let me show you what, SOXS. If it hits 83.63, which of course it did because it went all the way to 87.25, raise the stop to 81.63. So we've got ourselves about a 100% gain in that particular instance, and now we're out. We're out. It's trading at 74. I really don't mind. It could go higher. I don't really care. In fact, I'd be looking to wait, have patience. I don't know if I want to trade the SMHs long. I'm just prepared to wait. That's the way it is. So what did we do? We went all the way to, what did I say, 80-something? So we went all the way. We haven't gone to that high of 114.60, which I suspect we will get to in a cup formation later on. I think that's done. The TVIX, I'm embarrassed. I'm sorry, subscribers. We thought we were taking a great gain on Friday morning, 26%. This is 200% long the VIX index. Well, it turns out, this is upsetting. I said, no, we should be satisfied. We've got a really nice gain and all that. But you want to know something? The TVIX hit 15.99. We got out in the 720s or 730s. It went to 15. That is a whopping game we gave up. Anyway, we had a game, can't complain. I'll be right back. Basil Chapman, the Dow is down.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
So, okay, let's continue with the train of thought, and let me show you a couple of things. I'm putting this chart up just for a moment here. This is not, obviously, this is not updated because we went down to the 15,000 threes right there. We went down there. And this is the chart that I discussed in my webinars starting earlier this year, and I've had 3 of them discussing the relationship, the commonality between the period we're in now and the late 1920s. And the real big question is, and I had a question from Sandy sent to me just a moment ago. Good morning, Basil. Very simply, is this the low you were looking for? Can you adjust the chin and the tick? All right, let's do one thing at a time. I want to show a bunch of things, but let me just, this is a great question. Let me just show you, I'm going to extend this now. This is done belatedly. Remember, this is the chart that you saw. I never made any changes to it. Even the second one where we went from 18,288 in the Dow, just a little higher to 18,351 in May. So March was 18,288, and then we went to 18,000. In Elliott, this is my interpretation of the Elliott wave, and I just discussed it a short while ago with someone that I know who's done a lot of work with the Chapman wave and is an absolute expert on Elliott wave. Met with everyone in the whole business that's done anything with Elliott wave, from Proctor to even what's his name, who was supposed to write the book with Proctor, but then turned it down, just didn't have the time. He's an expert. He's not a marketer. He does not do the market. He does other things. But in fact, he's retired. So Yes, he concurred with me that this is in all probability it's a little complex in his analysis. The simplicity of it, in my way of looking at it, is this is leg 4 that I've been looking at and expecting. So for now, I'm going to do this in gray. I don't like to change charts to update them as if I was talking about it 100% correctly all the time. I missed that there could be I did say there was a chance if 17,500 held, we could make a slightly higher high, and we did it. But we did not break the 17,500 that I expected in the time frame that I wanted. I expected it to be earlier, a little earlier in the year, and it took a little longer. Big deal, but it did take a little longer. And fortunately, we've had the right trades, so it's not like it's really been upsetting. It changes the way this particular pattern looks. And so this gets extended down a little bit, and this leg 5 should come in. Where does it start? Remember, and I spoke at the time, I said, this is not the exact levels. This is the pattern. It's got nothing to do with I don't even know if we can extend so much above 20,000. I just know that if this is 4, at some point, rather than it being 5, the end of the whole move, this is it, we're done, we're never going higher. I don't believe that's the case. I think there is enough evidence to say we can have a whole new rotation and retest these highs. Whether we make the classic Elliott Wave 5 that says you've got to expect a whopping move. Yes, you can have small 5s. In fact, my work suggests that for the last couple of years we've been having short 5s. That's not the issue. The issue is in some of the other indices. My issue right here is that there should be, thank you, I was just about to say Yoda knows me very well in the den. I mean, not Yoda, in the den. I'm expecting a coda, the Beethoven coda that we got in our, going to the October high of 2007. This will be an even bigger one, going to a higher high, and that should be in 2016. That's my thinking. And that's one of the reasons why you can't take one person's word for it, but I had to recommend it very strongly for a long time. Whenever I had my callers, especially the callers, to say, I'm at work, I really can't do, what should I can't follow the market every hour, every day. What should I, and I said, take something off. I said about the IBB, start taking something off. I said about the XLV recently, that's why we were short. I think that that's the next one, not the final one. The final one, the auto parts, that I think the big winners are going to turn down. So the question, Sandy, is no. I don't believe that this is the low that we made today. The move, even though it was 1,000 points down, I think we're going to have a rally from here. I think we're going to make an arch formation. If I was, I'm doing my show now, but I would be trading live right now. My bias in really on the very short term would be more towards the upside than the downside just right now. But my big thinking here is that, let's move this away. So this is the Elliott Wave. Where does it say we should go after a huge move like this for 6 years? I think we're looking at time, Sandy. We're looking at time and price. So the answer to your question is, on the short term, yes, I think that a major chunk of the sell-off, the short term, the peaks have been made this morning in the inverted ETFs, or the lows have been made in the short term. For instance, IBB, come on now, IBB. Look, even though I think that the selling must have intensified huge, where did I say the IBB low was? IBB, I mean, look, even the TVIX, even the, what am I looking at? The VIX index. I think that's some kind of a high today. Well, not by the end of the day, of course. But look at this. You go down to, if I can see, 284. So let me show you where 284 is. 284 is right here. This is a new week, and it comes in right 281, 284, right there. Okay. Now, am I going to remember that? Yes, I will remember that. Right there. Okay. And there's the dashed line. So where do I go? I put in a straight line here because it's a new month, and I don't know if we gap down. I think we might have, but usually indexes don't usually gap down. 284 is right here. And now I'm going to make that nice and thick and like a red candle. So wait, make it nice and thick. Color, make it red. And there it is. Okay? And 284 comes in way below the 9-period moving average of 339. The IBB is done. It is finished. It can have a fabulous rally now, and I'm almost sure it's going to have a decent rally. If it's not starting today, it's starting by Wednesday, the latest. And I think that rally is going to knock the socks off people who've just gotten short over the last 2 days. Just as the decline knocked the socks off all those that looked at me as if I was nuts, saying, IBB. I met with someone just recently who's in the business, who does biotechs, IPOs. He does everything. And he looked at me saying, really? IBB down? I mean, look at Kendall Square. They're busy building. And I said, exactly my point. You were in Kendall Square. You know that it's just, it can't work like that. They can't be paying that kind of, overpaying that kind of expense. So I think that for months and price and time, we've done most of the price. I don't need to see it go to 236 right away. I think it bounces to the 318, 326 area. No, 318, 320, it's already 322. Wow, what a nice bounce. Wow, that is amazing. Okay, so let's just say that it could get, I'm looking at a Friday's chart. Don't get carried away, yeah? The IBB right now is at 330, okay. 330? 306, 334, trading at 330 down 9. Yes, okay, 330. Let's go back to our chart. There it is. So 330 is right there. And I think it can bounce. Yep, it can bounce to the 330s. It can bounce to the 339, to the 345 area. I don't think it's going to go much higher than that. And then it makes the H pattern and starts coming down, and it makes a lower low. I would look at 236 as one of the key metrics that I'm looking at in the left side, right side price time edge, because now you can start stretching out. You've done a chunk. Now I can use this as the midpoint, and I can go from there to there, and that takes you out to maybe late October. By late October, I think you're in the 260 to 250s and trying to go down to the 230s, actually even sooner than late October. Okay, so that's the IBB. Why am I spending time on it? Because it was a major sector. Those funds are getting killed right now, because most of them are heavily weighted to the IBB. That's my thinking. Okay, so now what I want to do is I wanted to talk, this is my newsletter. So we're there. I give the overview, a really big overview today, talking about what to expect. I show the charts. I show the VIX index. Leg C should spiral to the upside. If that's the case, break trend lines. We're ready to go to 35, I think it is. So it's in leg C, actually. Now let's do this. This is the one I want to look at here. Oh, this is a stock we had, CTAS. Why do I feature CTAS? Because CTAS is, in fact, there we go, CTAS. CTAS is Cintas Core, overalls, clothing. This is really a part of the economy. It's like high-grade copper, right, telling me about world economy. So overalls and clothing are telling us, because it's always late to the party. Look, the major low was where? 2009 in March. It made its low in 3 weeks after the Dow. So it's always just a little late. And here's the top. The Dow made its high in May, but the S&P, SPX, made its high. I think it was just a little later than that, wasn't it? Dollar SPX.X. Yeah, the made its high in May as well. Okay, but you remember it's the E-minis. That's what I was thinking of. So the S&P made 2134.72 was the high in May, but then it retested. You remember the retest? And that retest was 2132.82. 2 points below, less than 2 points below the all-time high in July. That's what I was thinking of. So now you've got Cintas starting to tear to the downside, and let's see where it is. Let's see where it is right now. What was the low today? We shorted at 86.91, about a point off the high. CTAS. CTAS, and the low today, whoa, look at that. Oh, it's right at the high. Isn't that interesting? So the low was down at the 78 level. 78, wait a minute. I did lower the buy stop on it. CTAS at 81.05. 81.05. It went 81. It went down 3 points lower than that. Make the stop 81.05. We're about to be taken out if we haven't been taken out. The high so far today is 80. Yeah, we were taken out. So we had a very nice profit, a short-term profit, 5-6% in Cintas. But the most important thing, the reason why I did it was there were other stocks that were way weaker is because I like to test. I want to see whether or not we are timing correctly using the Chapman methodology, and we are timing tops in the stocks that have done the very, very best. And this is one. And I suggest to you that this low of 79.51, which was in fact 79.51, was taken out this morning, is telling me that that rectangle formation has moved the rectangle to a lower level, and you can actually pull it back even lower to the next support level. And I would not be surprised if it goes down to the 75s after a little bit of a bounce. Now that's important. That's how I like to look at things. So the next thing we were looking at here is, what's this chart? Oh, for the weekend, the SMH, the market vector semiconductor ETF, short from that arch, that right shoulder failure pattern in the weekly chart, via the SOXS, which we are now out with a really nice gain. But look what happened. It plummeted. So any big rally in this SMHs, I want to reshort because I don't think this is even close to being done. The next one was right here. So this is my analysis of the IBB, and there I showed you the left side, right side price time match to the 300 level. Little did I know it would smash that today and go even lower. And for my subscribers to my service, they know that on the weekends they can start looking at my daily, weekly, monthly analysis besides the daily one. This is the daily, weekly, monthly, showing exactly what we'd be looking for, the weaker technicals that I mentioned back in May, etc. And now look what we've done. We've started to test that left side low all the way to there. And that is really important, back to early 2014. So I'm looking at this and I'm saying the metrics that I used, the techniques that I used have worked so far. The really difficult thing, and I hated to get out of those positions, bought at such beautiful prices, you got to take big profits like this when you can. I might be missing, like we did in the VIX index, we might be missing another 70% gain. But, you know, a big profit is a big profit. Now, the big thing is going to be, where do we get back into these positions if I want to get back? That's going to be tough. That's using techniques that have to do with shorter term, have to do with the 120-minute chart. Look at the 120-minute chart. So it went down and broke that low. Where are the support levels? That's what we'll be looking at. And it didn't look a way quicker time period. So that means that the rally might be a short-lived rally and very sharp. And today we're already coming back very nicely. The Dow's only down 345. It's 700 points off the low. I mean, that is huge, right? The comp index is now only down 95. And the S&P is only down, I think that's not quite correct. Let me just see what the S&P is right now. S&P, click, SPX, and that's right there. The S&P right now is down 45 at 1925, having made a low of 1867. That's a long way down. It's going to take a lot of work now to start to repair the damage, getting ready for the next big move to the downside. I mean, that's the way I'm looking at it. So the answer to the question that Sandy sent was, the question was, is this it? I think that's really basically what he's saying. I'm saying no. I don't believe this is it, but it is it, I think, for right at this particular moment. And I just wish I had all my stuff in, because when the Dow was down 1,000, I was saying, well, wow, to buy the futures here and just go to sleep for 3 days or 4 days would be great. But you know what? Didn't do it. I had a little problem with the technicals, and I didn't want to be stuck with doing something silly that I had no control over. So that's it. I'll be right back. Basil Chapman had a couple of questions, emails, and I'll get to those as well.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartley's, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Folks, for those who bought Apple, a round number low, 92 today, is trading at 107. I think it's going to 111 to 113. And this pop-up, it's going to be very interesting. And that's what I think happened. I just had a chance over the period of the last 2 hours to grab every once in a while, grab a stock and look, and I saw so many round number lows. All of a sudden, it was making a lot more sense. And I do think that we saw the low today, and I don't have time now to talk about it. I'll talk about it tomorrow. I'm calling this Wednesday, 2 weeks ago, I said it was imitating some kind of an internal low. This, I think, is more like an internal low, exactly that I was looking at. You watch the VIX just plummet by the end of the day. And that's my thinking at this particular point. And bonds should also pull back. So let me run just a whole bunch of questions. Make all that we took off the table with the TVX back with the XIV. Okay, so we've got one of the traders who's gone out of his TVIX and he's gone into the XIV, which is the long position of the VIX index. Very nice. I like that. That's good. So here's a question. Hi, Basil. I have a question for you that I hope you can help me with when you get some time. What I'm confused about is on the 4th of February 2015, the IBB hit a low of 305.01, and the BIS hit a high of 44.65. Today, 824.15, the IBB hit a low of 284.16, but the BIS, the 200% short, the IBB, the biotech ETF, only hit a high of 38.49. Being that the IB went to a lower low than before, why didn't the BIS go to a higher high than 38.49? Hope you can clear that up if you find time. Thank you as always for all you do, and that signs, Sir James. So this is what I'm looking at here. You've got to remember that these things recalculate every day. That's number one. That's why they're lousy vehicles. You've got to hold them only when they are absolutely accelerating. Then they are exhilarating. But the moment these things are stopped, you watch how quickly the VIX will shrink and the BIS will shrink if the IBB starts to rally or the general market starts to rally. So the answer to your question is, it was eroding all the time. If you look at both the long and the short ETFs, all of them, they all have plummeted since their IPOs because they get recalculated. The 100, the 200 and 300% ones. Okay, now next question is, so I'm looking at this, the VIX. Let me just do this. I hope to have all my equipment, everything working on this machine. That's where I want to do it. So on this machine. In the meantime, back at the ranch. Let's go there. Yep, the VIX is down. The VIX is right now trading at 36.67. It's up 9 cents. But look what happened. It hit 50. Well, what am I looking at here? Why is this thing saying 55? 36. Oh, wrong. 10 minute. Wow, you got to know what you're doing here. 10 minutes. Let me go to day. I don't want to run out of time. I don't want to run out of time. Cancel. Running out of time. Day. There we go. Okay. See the VIX at 56.40. It's trading now at 36.47. I think it's going to be pulling back quite a bit more as the day moves on. And I don't know if we'll go plus today, but I think that it could be the low that we saw is an internal low, and we should take 5 to 7 or more days. It's almost 2 weeks, I think, to make an arch formation before we start heading back towards the levels that we saw today. That's my thinking. Okay, number one. Number two is using this. See, the Dow's come way off the low. It's at 16,254. What is it? 16,254 is in fact almost 1,000 points off the low this morning. How does that work? All right, what we're looking at is, I think that we made an internal low. We're going to wait for the residual low. That takes sometimes 6 to 8 weeks. We'll see if that's going to work. That's either lower at about the same price or a little bit higher. My thinking is it'll be lower. So look for a balance. I think it's a tradable balance. Don't forget subscribers at 12:30. Before that, I'll even try to update. I'll get these charts organized and I'll do that.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.